Time and time again, we talk to clients who have passed the $1 million revenue mark, but still struggle with cash flow, paying themselves what they deserve, and just breathing more easily. We've talked in past episodes how this isn't a revenue problem. In this episode, we get to the root cause of these issues. You're going to want to listen.
So here's something I hear constantly from business owners who are doing everything right. I'm billing more than ever. Why does my account look like this? They're not exaggerating. They've got clients, team, revenue is up year over year, and yet something's off. The cash isn't there. The profit isn't matching the effort, and nobody around them has a real answer. So today, Seanna and I are going to give you that answer in almost every single case. When a firm in the $1 to $5 million range is struggling with profit and cash, it comes down to kind of the same 5 areas. And the frustrating part, most of it's fixable once you know where to look. You just didn't look yet.
So welcome back to Unfiltered Profit. We are excited to dive into this topic today. I think the past few episodes have really set the stage for this. We have talked goal setting and talked about how at this point in business, if you find yourself in this 1 to 5 million range, your problem's not a revenue problem, even though we all like to think, oh, I'll just go earn more money. I'll go get some more clients and it will all fix itself. Spoiler alert, it will not all fix. It does not do that automatically. And that's only helpful if you then know where to look, to plug the hole, to save the sinking ship, for lack of a better word. Yes. So let's talk about the first of these areas. I truly think that this is the first place anyone should go to assess where they sit in their market, in their company, like what is going on. And it is, to nobody's surprise, pricing.
Which might be the hardest one some days.
Yes, because there are signals coming from all directions on your pricing, right? Like you have consults with clients and you give them a price and they don't like it, or they fight back, or they say, well, the past person charged me this, or you in a prior project charged me this. And it's like, well, yes, my company has grown and I have grown, and maybe I just priced that wrong in the first place. And sorry about that.
Yeah, or they try to add a little bit extra. So maybe the price is okay, but like, what about these deliverables within that price? And can we just add to it a little bit more, make that margin a little bit tighter on the business owner side?
Yes. And so from the practical standpoint, what you have to do is sit down and look at the pricing and look at the output and see what your margin is. And this isn't like, you have to take in the whole company margin on this piece. So if you can only do 10 projects per year, I'm just trying to simplify this down, but if you can only do 10 projects per year, this isn't just like the man hours that go into that project. It's taking 1/10 of the total cost of running your company and putting that to each project as well to say, all right, well, if that's my capacity for the year, is overall this pricing profitable for what I'm doing? Or is it profitable enough because, as part of the strategy of being a business owner, you weigh this salary, reasonable compensation if you're an S Corp versus distributions. And so there's still got to be something left over to pay yourself as well for the risk and all the things that you're taking on as an owner. But if you can't sit down and look at your profitability per client, per project type, per product, if you're a product-based business, we don't work a lot with product-based businesses, but you have to be able to answer that question and know for sure that you're profitable on those units.
And as a business owner, that's hard to do, right? Like, how do you convert your profit and loss into by client profitability, right? That's a question that gets asked, is like, that's great. I kept my books now. What do you mean? Like, I need more information.
Yeah, it's not simple. And we work with a lot of professional service firms that have additional project management add-ons to their accounting software, which is great because then they time track to projects and they can see some of those aspects of it. So it's like, yes, at that level, we can see that the project was profitable due to the time spent on it, the sub-consultants, those types of things. Great. Project is profitable at that level. And then we have to say, all right, well, how many projects did we do last year? And take all those other costs that we're not actually tying to the projects. It's not a project specific cost. And then are we still turning a profit? Because that's, I think, where you can go, okay, well, we had capacity to take on more projects, but we didn't get the contracts. So it was a slower year. And so in those moments, you could say, yes, it's a revenue problem. We know we need to have not 10 projects a year. We need to have 15 in order to hit our profitability goals. Or you could say, no, we were like over capacity. Everybody was working as hard as they could freaking work. And this is where we were at, and we still weren't hitting our profitability goals. Okay, well, then that's a pricing problem right there. Then you can look at the profitability per project and say, well, that margin's just not high enough for what we need based on company costs. Or you're going to look at company costs and say, they're too high, or why are they too high? Why are they what they are? Which I think leads well to our second place to look, which is drumroll.
Yeah. The team, efficiency, wrong seats, the costs of the wrong hires. I mean, the team matters, and they go so far into whether you're profitable or not. And what we often see in kind of professional service companies. So we will see payroll being 30 to 50% of revenue. But that 30 to 50%, even if you're in that, can feel different, can look different. It can be the right mix, and it can still not be. It's a good measure, but if your profit's not hitting where it needs to be, I'd say for professional service, that's our first place we start looking, is what is that payroll metric.
Yeah. And I think we see this a lot and probably live it out as well. I mean, we are business owners. We bring this up a lot. You get to a certain point in running your company, you're like, okay, I'd really like to hire this insert position because I really don't want to have to do that piece anymore. And the harsh reality is that sometimes you're just not there yet. Like, you just can't afford that position. In this revenue range, I've seen this a lot where someone hires like a full-time marketing person, but they're a service-based business that relies on referrals a lot. It's like, well, what is that $120,000 worth of salary really getting you that isn't driven just by owner reputation and owner networking anyway? This is not a business that takes in a lot of, the marketing effort's not going to go very far. You can have a great website, but you probably shouldn't spend $120,000 on the great website. And so we see people try to kind of build out their C-suite well ahead of really needing those people there, when you could have gone with like a fractional consultant to fill the gap of what you needed instead. And that salary load, especially when we're talking like C-suite level, is very high, and it's generally not project related, not client facing. And so it is that operational piece that's really dragging down profitability and creating an incredible cash crunch when it comes time to run payroll on your biweekly basis. Yes.
Yeah. Well, I was trying to think, I've been doing the math. So if you're a $3 million professional service company, we're saying $1.5 million is payroll for the year. If you're at that 50% level,
which is high, right?
Which is high.
50% is high.
You've got a lot. Right. And gosh, if you fluctuate, you've kind of got that problem. But let's say that does include the owner. So if you got that 50%, $1.5 million, that's $1.5 million left to run the business. Because I guess when I'm looking at payroll, what I'm really looking at is who's delivering the product. And so if you then have rent or utilities or software cost, training, all of them, that extra 1.5 over start going real fast. And if you're still aiming for a 10 to 15% profit margin, I mean, suddenly there's just not enough for that $1.5 million payroll. And as an owner, for you to feel like you're reaping the benefits of owning a business.
Yes. But it's also not always hiring positions that you don't yet need, even though I see that a lot from, hiring ahead of the curve and then like the revenue never catching up or those types of places. Sometimes it really comes down to the efficiency of the team. And this is both team related and the hard part, owner related, right? And we say this from walking this and hiring a consultant to help us in this space. But you have to sit down and really define your company values, your standards, your SOPs, share those with the team, and then determine whether the team truly fits from what is the GTC, get it, want it, capacity to do it, something like that. I don't think that acronym is right, but from traction. I don't know. Lost.
But yeah, the team could not work, or we've heard stories of team members who are resistant to change or resistant to what their job description really should be, or the changing job description. Small companies are ever evolving. We're not talking about some big machine like a Fortune 100 company or the government. Like, unfortunately, there are not these there are not these perfectly scripted roles that you can fit into and say, well, none of that's mine. There's a lot of benefits at a small business, flexibility, and you are getting to see the clients. There's so much you can look at. And for better or worse, it's one of them is your job is ever evolving.
Yes. And if somebody doesn't like that and you're trying to change your company for the better, they're probably going to end up on the chopping block. And that is just the nature of it. If they want to be in a role that doesn't change, they might be a better fit for some local governmental role or something along those lines. Because if you're in a small business, it's just different, right? And we all know that because we live that. We live that way.
Yes. At some point, we need to break it down revenue. I've seen many different things depending on the type of business you have, but revenue per employee, billables per employee, you can break it down a number of ways. But what you need to do is find the metric that makes sense for your business, that you will measure, and can help you determine whether or not those employees are making sense for what they're doing and what they say that they're doing. And there's tricky ones. Lawyers are tricky if you ever end up trying to bring an in-house lawyer, because they're keeping you out of trouble, which is important, but do you need to carry that salary? Can you get away with something fractional? CFOs are tricky in that manner as well. Sometimes, you need a lot from a finance person, but sometimes you don't need anything. And so you really have to dig deep on what you're trying to get to and who can help you get there.
Yep.
And a lot of the time you don't need a permanent person to do that.
I think especially in this company size, it makes a lot of sense to utilize fractional advisors, the fractional CFO, the fractional CMO for marketing, technology, hiring an outside IT company, all of those types of contractual vendors make a lot more sense at this revenue size, but also making sure that you make the right moves. If you're in a cash strap position, you're not just oh yes, I should go get all of those things right now, right? They're not going to solve the problem, especially if you've got an internal employee efficiency problem on the deliverable side of things, which is where those revenue metrics are very important. And I think they reveal a lot. And if you want to see the quickest way to identify a hole in the boat, the hole that needs to be plugged kind of thing, you start looking at your industry, revenue by employee, or percentage billable hours, those types of things, and look back at what has been tracked within your own company. You'll probably identify some problem areas that need to, at best, be tweaked, and at worst be completely shifted around.
Yeah. It's never ending, all those constant things. But what I'd say the next place, and you kind of hinted at it, is what we see is folks go hey, what's the magic wand I can wave? What's that quick fix that will suddenly make my unprofitable business, even though the revenue's great, my unprofitable business profitable? They're looking for just kind of the easy button, as Staples would say. I wish I still had one, but yeah,
I know.
You kind of press the easy button. But the easy button, from what I found watching just online small businesses, tends to be very expensive and actually not fix anything.
Yeah. You can easily spend tens of thousands of dollars. That is the only easy part about anything in business. The rest of it, not so easy. If you're in business long enough, you earn your stripes the hard way, period. No matter how many lessons you learn from other people, your own lessons will come smack you in the... Yes. And I think especially in the early days of business, people really get caught up in this area, this quick fix, this not, I don't even want to say shiny object, because shiny object makes it sound like you don't have a focus. Because I think entrepreneurs are incredibly focused. They know where they want to go. They just know that there's a lot between where they stand and where they want to be. And there's a lot they don't know, and they don't know what they don't know. And so masterminds and all the experts become the like, oh, well, they will teach me what I need to know to get there faster. And I say this from a place of empathizing with people and having been there. I think Caitlynn and I have even talked about this on here before, but we have been in a mastermind together before where we spent the whole time learning that we already knew everything in the master. Which was not a cheap mastermind to be a part of. So anyway, you get caught in those types of things and they eat away at profitability. I think we can all, at any stage in business, be reminded that we need to bootstrap a little bit. So you get a little spendy, you got to like remind yourself to bootstrap and pull it back and keep your profit goals in mind. And just know that at the end of the day, the hard work is what leads to the fixes. There's no quick fix. There's not someone that can save you unless you're truly being hung up by this I don't know what I don't know situation. And the only thing I can think of that really comes to mind there is like, if you're like, I seriously like could not even figure out how to start figuring out profitability, or I could not even begin to start to figure out why my team isn't as efficient as they need to be. And I don't know how to manage them because I'm new at this whole managing employees and a team standpoint. So those are two places where I can see like you need an expert to step in and help you a little bit, get past a certain hurdle and get everyone rowing the same direction, pricing in the right place. But otherwise, especially if it comes to anything sales related, like you've already made it to this point of revenue. Like when we've said, revenue is not the answer. We got to fix the system and then get more revenue to scale properly so that more money is in your pocket.
Yeah. And those experts really need to roll up their sleeves and get into the business with you. And I think we've seen in small business this belief that like you can go to an hour-long meeting, be talked at, raise a little problem, and then go on with your day. They're not certified therapists. And so the other piece being how often they prey on your belief that you're not qualified to do what you're doing. And that you think you can replicate what they do. So there's so much nuance, right? How they built their business is never going to be. I mean, maybe in a like 0.001% of the time it's going to repeat, but there's so much more different about you and what you want to do in your team that what you need is that expert to roll up their sleeves, get in the weeds with you, talk to your team, look at your books, look at your very specific situation, understand you. And you just don't always get that in these things. What you get is what worked for them. And that can be great, but that can be such a like sidetrack effort of like, oh, well, if I just replicate exactly what they did and it'll never work. It's not you. So just be aware of like why you're getting into those things. And if they're simply adding more work, I think, to all of your team and yourself, then are you really getting what you need? There's going to be work. You have to. But if they don't have a way to lighten the load while they improve it, I'm not sure they're actually making a difference.
Yeah. So definitely take a hard look at any of those extras. If you're in this cash-strapped place or not profitable place, because we know that those two don't equal each other. You can be a profitable company and have zero cash because you don't collect it well, and there's aspects of your accounting that needs to be discussed, or you've got a ton of loan payments because you've had some not profitable times. And kind of leading into the next one, the hardest one to talk about is that you have to be very honest with yourself about the economic benefit you are getting from the company. So that is your paycheck, but not just your paycheck, all cash transfers to you, and all personal expenses that you are paying for through company accounts. And that last one is one I know we as accountants are like, do not commingle funds. Yes, occasionally things happen. You get caught out. You only have the business card, blah, blah, blah. We know that stuff happens. But what we see a lot of times is people don't feel like their company is paying them any money. Mm-hmm. And when we go look at that owner distribution area, they have a lot of expenses that have run through the company. But in their mind, because it's not part of that paycheck, part of that just cash infusion into their personal account, they feel like the company barely pays them at all.
Yep.
When in reality,
or they don't look at their tax beneficial expenses too, right? So like, let's say you're running your car and you're running your home office and you're running your travel, all of that. Would you do the same for another employee? And if that answer is no, then yes, as the owner, you're getting benefits, right?
Yeah. And these are all items that as we do advising for clients that are looking to sell their company, guess what? Those are all items that get added back when we're trying to say, like, here's what the cash flow, here's what the net profit is from the company when we take out all the owner benefit that's there. Mm-hmm. Like if you rent your office space to yourself, any of those items. But somehow that becomes the thing where someone sits back and they're like, my company's just not paying me enough. And it's like, well, I hear you. And there's obviously something else that drives that emotion, right? Like maybe there's something on your personal side, some financial goal you wish you were achieving. Mm-hmm. But let me tell you what the dollars tell me is occurring in the company. And those can be two different things. And the reality is, if your company is bleeding cash, if you are struggling to make payroll or any of those problems, you've got to be very honest about the amount that you are pulling from the company through those expenses and those pieces. Because guess what? That's the first place that you can very easily cut and have cash to pay your team.
Because, you're going to have to go back and look at the personal side. But I think we forget to look at us as owners, sometimes as the employees, and it's just so easy to do. But if you ever want to replace yourself, you have to sit there and say, okay, can I do it for this amount and still get at what I want? Like, it's this never ending thing. And you can get super technical if you've overdrawn your company, which means you've reduced the basis because there's no income, and you've taken a loan to keep payroll afloat. But that loan is also going to a draw to you. The IRS is going to go take that as a capital gain on your 1040. Like, you don't win. You can win with a bad accountant. You can win with someone who doesn't know what's going on. But long term, it just doesn't work. And it's set up that way because what they don't want is you to cannibalize your company to pay yourself. They want you running your company as you should, as a business would, as you were preparing it for an investor to look at. Like, that's what the intent should be when you're putting this and making these decisions and trying to decide, am I a going concern or not?
Yeah.
And some fun accounting words.
Yeah. Is your business viable? Is it going to continue in the future? That is the going concern. And sadly, I talked to accountants about this during the COVID era with the idle loans. A lot of companies took those as quick, easy cash infusions that they then used as a personal low interest loan. So I saw this in people taking those and saying like, okay, well that we just get to pay back over a long period of time. So the SBA loan, the idle loan, EIDL, and people that took those, you see a lot of that situation on the balance sheet where they overdrew the equity from the company because there's a large loan infusion into the company that they then took out. And that was incredibly common, but it doesn't look good then if you go to try to sell to anybody. I saw this with construction companies that would think like, okay, I'm kind of tired of this. I want to see what I can sell my company for. And it's like, well, guess what? Your debt is upside down because of this loan that you took out. And it has to get repaid.
Yeah, you can't. We just helped sell a business earlier this year. And the SBA EIDL loan has to be paid in the process of that sale, right?
Yeah.
So it can't be passed on and it doesn't just disappear. And so all of the calculations always included, what does that payback look like in the owner was aware in this case, but we've seen situations the owner's not aware and suddenly they're like, oh, well, that price looks a lot worse because you gotta go pay that loan off first.
Yeah, because you essentially got your benefit of selling the company ahead of time by having that loan sit out there and then you use it personally.
Yeah. And we're back to business is business, personal is personal. If you want to keep the lawyers happy, you will separate those.
Yes. Keep the lawyers happy and protect yourself. Yes.
But as you grow, you have a team, right? And so we talked about the owners cannibalizing it, but sometimes your employees are using that corporate card a little too willy-nilly and there's no oversight because you haven't done this before. So how do you determine who, I guess, has the keys and who has the authority and how do you fix this when it starts to go off the rails?
And I think this part is so hard in a small business because, in accounting programs, we talk a lot about internal controls and segregation of duties so that there's one person approving and one person paying and all this kind of stuff. Sounds great. What do you do when there's 3 people in the company? It's that's not so easy to do. And I have lived out a case of fraud within a small company, my family's company. And so I know how it can happen. It's not just something you read in newspapers and see online. It is very common in businesses, more common than we like to think it is. And it sometimes is very hard to have that oversight. Even if you have an external accounting team, it's hard for your accounting team to know, well, I don't know, those expenses were normal. Yeah. That person has always had authority to do that kind of stuff. I didn't, unless we see some incredibly drastic trend or something egregious, you guys didn't get a new car and car loans are being paid or something like that. It's hard to pick up on well, no, I don't want them spending that extra $1,000 a month over there on that thing that should have never happened. Okay, well, now we've got to talk about the internal controls in your company and how that oversight is in place. And as a business owner, it's kind of hard, right? Because you're like, well, I want to be able to step out and trust people in certain places.
Right. You do. And she's right. As accountants, it's hard too, because we don't want to overburden the owner with questions. But sometimes, it all looks okay. Or why would this be wrong? Why would the owner have given this person permission to spend that? We're just not in your head. And our employees aren't in our heads. And if you're busy, then you forget to write it all down and document it and make sure everyone has it. I know that there's tools out there today that can help some. They can set limits. They can say, hey, before people can buy this, approval needs, and all of that can be automated through an app. It's worth looking into. But it's one of those problems I feel like you don't realize is a problem until you're 6 months into the problem.
Yes. And I think some of it is even just so nuanced by company of oh, well, this is the problem that we might have within our team due to certain personalities and their specific role. And so it's not something that even just I don't know, going to Ramp and having employee cards for that type of thing. It's that's not really going to do anything for certain situations. So it is very hard. And I think the absolute best thing that you can do as a business owner in those places is pay attention to the monthly financials and kind of know what your target is and what your comparisons are so that you can start to flag mentally when something just doesn't feel right. Because that's all you need is that gut feeling. I've been talking about that a lot lately of I do think a lot of parenting and a lot of business ownership is paying attention to your gut.
Mm-hmm. Yeah.
And I think that your numbers can give you a gut feeling to know where to dig a little further, ask the questions of your team, those types of things. But it's a challenging area in small companies because you can't have the many layers of controls in place.
Yeah. And you have to pay attention. And it all circles back to that because if you as the owner spend a quarter not paying attention to those financial reports that are sent your way, a lot can get by. And if for some reason you've got some untrustworthy individual, they're going to notice real fast how long they can go before you kind of pop your head up and notice. And Smart ones will adjust their pattern to fit what they can get away with. So like it can sketchy out there, but it's that gut and it's that paying attention. As long as you're the owner, as long as you're a shareholder, you have a stake in the company, you have to be invested in seeing what those financials say and just questioning them when they seem out of line.
Yeah. And I think the best encouragement we can give there is the reminder that you are building an asset. This isn't just your job and just the stress of your job. You are building a sellable asset. And just like you would want to know how your investments are going in the stock market, you want to know how your business is trending as well. And it's not just about your paycheck today. It's about what you could get paid in the future, or the ability to hire someone in so that you sit back as a little bit more of that like part-time owner, step in, lead the company, but otherwise everyone's handling everything. And guess what? That's a recurring paycheck for you, where it's a little bit more passive. But that is the way you need to think of this, not as your job where you've got yet another task of looking at the financials. This is like the important investment strategy of your asset.
Yeah.
So look at the financials.
You just can't fully outsource it. And that's the part that I think really makes or breaks that 1 to 5 million range is, did you think you could fully outsource it, or did you show up as someone with an asset to manage and manage it? Find the other things. Like there's so many other things that you're doing that you can find a way to outsource, to hire off. Like, please do it. If it's like your admin reviews it first and highlights things for you, fine. Train them to think like you. But you still, the final piece is with you. And when you go to sell it or hire it, you're the one who needs to answer. So with all of that, now that we've overwhelmed all the business owners, where do they start? What's next? How do they leave this with some like actionable ways of not drowning?
Yes. Here's the thing. This list, the way that we walked through this was trying to kind of give you an order of operations. So don't try to analyze all of this stuff at once. Start at the top, start at pricing, and work your way down, unless you automatically know, oh yeah, that one's mine. Like I know my pricing is good, but I know my team is inefficient. Or I know my pricing is good, but I've got people hired into positions that we don't really need because we're a referral-based business and we're spending so much on social media marketing or like something like that. So pick one and go tackle that first. And then let's look at the economic impact of that. And then let's assess if any of the others could be tweaked in those areas. But if you do that and you pick one, you walk through it, I think you're going to see change faster than you even thought was possible. Again, because you're switching away from this mindset of let me just go get some more revenue, because revenue doesn't fix the problem. We're fixing the actual problem to create a company that is scalable and sellable or as passive income, because that is the whole step we're taking in this podcast and where we lead our clients is like, that's the focus here. If you want to just have a job for the rest of your life and be owner operator that bears the client burden, great. But that is not what we're going to be working through here. But you'll still get some actionable tips, I'm sure, along the way.
You will. You just really need to make sure. I mean, either way, but like boost up that retirement if that's the plan, because the money stops when you stop working otherwise.
Yes. Okay. So the last thing, if from listening to this today, you feel called out somewhere from this conversation, then that is a good thing. I do think that gut punch is clarity, and it tells you where to take that first step. So think through that and know that you're not in this alone. We all as business owners are trying to figure this out. We're all approaching each day as the very first time we've encountered that day. So don't feel like you're behind. None of this is a problem with you. It's just you're earning your stripes in business and you take it each day at a time. And if this has resonated with you, we would love to hear from you. So please feel free to reach out to us. Caitlynn, you give the email address for that because I never remember what that is.
That's why I say see the show notes, because
See the show
I'm
notes.
pretty sure it's podcast related, but I will be perfectly honest. We made it and it keeps slipping my mind. But we're real. We've got a phone number. We always post that in our show notes as well. So
Yes.
text us, call us. The email will be in the show notes, and just reach out. And you're like, hey, I've got a question, or this resonated, or I'm stuck here. What is
How do I even
next?
start?
Yeah.
We always have more thoughts.
We've got lots of thoughts, and we've got lots of referrals and friends and business people who
Yes.
have earned a few more stripes than us that we always like to call on as well.
Absolutely. Thanks for listening. We'll see you next week.